the broad-based euro optimism that we've seen with this shift in fiscal policy in Germany, said Christine, coined by Nelson FX analyst at Danske Bank. On Tuesday, the party is looking to form the next government of Germany, Europe's largest and the world's third largest economy, agreed to loosen fiscal rules and create a 500 billion euro special fund to boost infrastructure. That sent the euro surging against major peers and the major investment banks have been quick to lift their growth forecasts for Germany and the Eurozone bloc, while some now expect fewer interest rates cuts from the European Central Bank. The ECB announces policy later on Thursday and is widely expected to lower its deposit rates by 25 basis points, the sixth reduction in the easing cycle. Bank of England rate setters, meanwhile, are generally sticking to their careful approach to interest rate cuts, having lowered borrowing costs for the third time since August last month. Against the dollar, the pound was down 0.1%, having earlier risen to its highest in 4 months at $1.12924. Britain's construction sector contracted sharply last month, a survey showed on Thursday. The preliminary reading of the S&P Global and CIPS UK Construction Purchasing Managers Index fell to 44.6 last month from January's 48.1, its weakest level since May 2020. Rocketing uncertainty around global trade policy, rising materials prices, and the looming payroll tax hike in April are all conspired to further sap confidence, said Elliot Jordan Dwack, senior UK economist at Pantheon Macroeconomics. Investors are recalibrating how to play U.S. President Donald Trump's whipsawing policy changes, weighing that a so-called Trump put supporting stock market prices may be fading and that his administration is more keenly focused on the debt markets. Investors had bet strongly that Trump's agenda to lower taxes and usher in deregulation would support risk assets in a similar way to his first term when he frequently touted the stock market's performance. The so-called Trump put, which refers to options, assumed that he would do whatever possible to keep the stock market happy. However, since returning to the White House on January 20, Trump's rapid-fire tariff policies have rattled risk markets, dented consumer and business confidence, and raised fears that his second term may not be as market-friendly as expected. Indeed, while stock investors struggle, the bond market has emerged as a key focus for the administration. Trump has been as a metric for the health of the economy, so this is a fairly drastic shift, said Ben Harris, Vice President and Co-Director of Economic Studies at Brookings, who recently served as Chief Economist at the U.S. Treasury Department. In Trump's address on Tuesday to Congress, he pointed to the country's drop in Treasury yields but made no mention of stocks as he talked about his first 6 weeks back in office. Today, interest rates took a beautiful drop. It's about time, Trump said on Tuesday, and in the near future, I want to do what has not been done in 24 years, balance the federal budget. We are going to balance it. That contrasted with 2017 when Trump addressed Congress and boasted that the stock market had gained almost $3 trillion since his election. Treasury Secretary Scott Bessent has meanwhile pledged to lower the U.S. Treasury 10-year yield, which influences borrowing costs for both the government and consumers. Moreover, the administration's mix of revenue-generating tariffs and aggressive spending cuts through Elon Musk's Department of Government Efficiency suggests a keen awareness of the risks posed by mounting government debt, which, if unchecked, could trigger a bond market rout. U.S. President Donald Trump on Wednesday exempted automakers from his stringent tariffs on Canada and Mexico for 1 month, as long as the companies comply with the term of an existing free trade agreement. However, Trump made it clear that he was not calling off his 25% tariffs on Canadian and Mexican imports, pressing the two countries to deter fentanyl smuggling. Oil prices were steady on Thursday, recovering slightly from a multi-year low. Brent was below $70, still pressured by the ongoing trade tensions and OPEC Plus's plans to raise output. Gold prices fell as investors took profits following a 3-day rally. Copper prices hit a near 3-week high, helped by a sharp pullback in the US dollar and hopes for more stimulus from top consumer China. The US weekly jobless claims report, due before markets open, will set the stage for Friday's key US payrolls data that could help investors gauge the economy's health. Traders expect the U.S. Federal Reserve's first interest rate cut for the year in June. On the other hand, the Bank of Canada is widely expected to slash its benchmark rate by a 1/4 point next week. Investors will also be looking out for Canada's trade data later in the day. In corporate news, oil and gas company Canadian Natural Resources posted a fall in fourth quarter profit as weaker commodity prices overshadowed a rise in production. And this is where we'd wrap it up on this episode of 18 Business News. Before we go, another look at our major stories in power sector. Electrification Agency unveils 440 kilowatt power mini grid in Cross River. And on illegal mining, Oluwabori, Nigeria leaders condemn foreign exploitation of mangroves. And in the energy sector, PMS costs may drop further as crude prices fall. And in inflation, manufacturers work tightrope as rising costs narrow profits. And in telecommunications sector, MNOs make 85% of total investment in mobile, contributes $109 billion. Don't forget, we are open for all advert placements, bookings and commercials. You can connect with us on our 8 Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1 on Twitter, Atlantic TV Net, or you can watch us live on our website at www.atlanticnetwork.tv. Peace and unity are the pathways to progress. I am Favor Chikwestri Michael. Thank you for watching, and up next is ATN Politics.
The board, management and staff of Morrison Media Group presents the 2025 anniversary lecture of Atlantic Television Network and Wish 99.5 FM. Theme: Imperative of Private Media in Sustainable Development.
Keynote speaker, Professor Tony Iradia, erudite scholar and broadcast guru. Chairman, Professor Umar Pat, President, Society of Broadcasters, Nigeria, and Vice Chancellor, Federal University of Kashiri, Gombe State. Panelists: Chief Honorable Arthur C. Kalabo, Information and Communication Expert; Dr. Haka Tuwait, Lecturer, Public Relations, Media and Communication; Dr. Bekwele Lawrence DK, Lecturer, Marketing Communication and Public Relations; Opaka Dakuba, Chairman, South Nigerian Union of Journalists; Susan Serakara Nwikana, Chairperson, Nawach River State; Chief Host, Dr. Chinyere Igwe, Esquire, FSM, FIMC, FNIMN, MNIM, ARPA, MIPPA. Chairman, Morrison Group. Date: 10th of March 2025. Venue: Dimeji Banquet Hall, Gay Place Hotel, Kilometer 5 East West Road by Obinkwere Flyover, Rumofi, Port Harcourt. Time is 11 a.m.
Call Ken Obofadi on 0802 301 5728. That is 0802 301 5728 or info@atlanticnetwork.tv or info@wishfm995ph.com. You can also call Laurentia Ogu on 0818 344 6746. That is 0818 344 6746 or lead content at atlanticnetwork.tv. This is signed by management.